Before we start, a quick reminder. Investing in the stock market involves risk. Always do your own research and read all relevant documents before making any decisions. You can listen to different opinions, but at the end of the day, the final choice is always yours. Because only you truly know what's right for your portfolio. In this video, I want to show you a simple framework for finding strong stocks on your own. This is a method that cuts through the noise and helps you focus on what really matters in the market. And the best part? You don't need complicated formulas or a PhD in finance. You just need the right screening framework. Today, we're going to break that framework into 3 simple levels. First, the basic scan. Second, the combination scan. And third, the custom scan. All 3 are about finding opportunities, but each level gives you more control and deeper insight. Let's start with the first level. The first step is scanning the market. Think of this like a library of pre-built strategies. Instead of manually searching through thousands of stocks, scans automatically filter the market and show you stocks that meet certain conditions. For example, one of my favorite scans is the all-time high breakout. Why is this so important? Because when a stock breaks its all-time high, it usually means something significant is happening. Strong earnings, institutional buying, or new business momentum. Stocks rarely hit new highs without a good reason. So when I see a stock trading above its all-time high, I immediately pay attention. That's where the real opportunities often begin. But scanning is only the first step. Next, we need to analyze the strength of the trend. Once a stock shows up in our scan, the next step is checking its price structure. What we want to see is simple: higher highs and higher lows. That tells us the stock is in a strong uptrend. Then, we can add a few basic indicators to confirm that momentum. For example, the 50-day and 200-day moving averages, a short-term moving average like the 10-day, its relative strength, and the RSI. When all these signals align, it usually means the stock has real momentum. But here's something important to remember. The stock market isn't about finding the single perfect stock. It's about eliminating the weak ones. Your goal is to narrow down thousands of stocks to just a few strong candidates. And that's where the next level becomes really powerful. Basic scans are good, but combination scans are even better, because they combine multiple factors at once. Imagine a stock that is breaking an all-time high, has strong sales growth, shows rising profits, and has high delivery volume. That combination tells us something important. The stock isn't just moving randomly. There's real fundamental strength behind the price move. This is where momentum investors love to look for opportunities. But remember something important about markets. Stocks never move in a straight line. They move up, then they pull back, then they move up again. Corrections are normal, but strong stocks usually recover and continue higher. That's the difference between real strength and temporary hype. Now let's talk about the most powerful level: custom scans. This is where you stop relying on pre-built ideas and start creating your own stock finding system. Think of it like a blank canvas. You decide the rules. For example, you could create a scan where the relative strength is positive. The RSI is above 50, the stock is outperforming its sector, and momentum is strong over the last few months. Now you're not just looking at price. You're combining momentum, leadership, and strength. And suddenly the market becomes much clearer. Instead of thousands of stocks, you now have a short list of high probability candidates. Then comes the final step: chart analysis. Once the scan gives you a list, you evaluate each stock one by one. Ask yourself simple questions. Is the trend strong? Is momentum increasing? Is the stock outperforming the market? If the answer to these is yes, you might consider building a position. But always remember, even the best setups can fail. That's why risk management matters more than prediction. The worst case? Your stop loss gets hit. But the best case? You get in on a strong trend early. And over time, those trends are what create big portfolio gains. The big idea here is not to copy someone else's stock picks. The goal is to build your own framework. A system that helps you filter out the noise, focus on strength, and make decisions with confidence. Because once you have a framework, you stop chasing tips from random people, you stop reacting to headlines, and you start participating in the market with a plan. My goal with this channel is simple: to help you understand markets better and give you the tools to think independently. If you found this framework helpful, share this video with someone who wants to learn how to analyze stocks properly. And if you're serious about investing, make sure you subscribe to Future Finance Lab. Because here, we break down complex financial ideas into simple strategies you can actually use. Thanks for watching, and I'll see you in the next video.